afternoon from the For the CME. This is Chris Robinson with your Traders Exclusive comment today for Thursday, the 13th. Heading into yesterday, we had a WASD yesterday, and at the end of the day, the data was not that shocking. The one interesting aspect of that report was the fact that they lowered expected carryout in soybeans. November soybeans rallied about 25 cents, and then by the end of the day, they had given all back, and we made new lows for the move. This morning, and we've come down the low in November beans 9.37. That's within 3 cents of the 6-month low we had just a while ago. So we're on a critical support level for November soybeans. The managed funds, they came into the report long 60,000 contracts of soybeans. They probably sold 10,000 yesterday, probably another 10,000 today. That means they probably have another 30,000 to 40,000 to sell. As they sell, that could put more pressure on this, the flat price for November soybeans. Conversely, if you look at corn and wheat, we actually have had a pretty decent bounce today. For Thursday, we've had traders obviously covering some shorts in wheat and corn while they're selling soybeans. So you're seeing that spread as these managed funds try to adjust their positions. They are short about 180,000 contracts of corn, about 150,000 contracts of wheat. Again, the USDA report really had no surprises. We have a very large crop, both corn and beans, coming down the pipeline. Over a 15 billion bushel crop for corn and over a 4 billion bushel crop in soybeans. That was something I think that the traders have been hoping for, a little bit of reduction there. They actually planted, and they found an extra 200,000 acres of planted corn, so that was negative. If you look at December corn, the levels I will be watching are the 50-day moving average at 335, and then the nice round number at 350. There's a lot of selling interest out there, I think, across the country by farmers and speculators that want to try and sell it at 350. We're in the middle of this trading range. Vice versa, if you look at what's going on in wheat, wheat pretty much follows corn. Wheat's had a bit of a rally here today, but we still have got a lot more upside to go for wheat to break out of its significant downtrend that we've seen. So all in all, not a lot of fireworks after the WASD. The second thing I would watch, which encompasses all these livestock, is the fact that the U.S. dollar is trading at a 7-year, wouldn't that be crazy? No, a 7-month high, and that typically puts pressure on all our commodities. I'm going to pull the car over real quick and talk very briefly about cattle, both live cattle and feeder cattle. They've come under a tremendous amount of pressure here in the last year, as we have developed into a situation where we've got an oversupply. There's a lot of animals out there. There's a lot of cold storage product out there, not only in the cattle, but as also in the lean hogs, which is the pork. So there's a lot of protein sitting out there. There's a lot of supply. What's happened? Well, we've got fat cattle and feeder cattle at 6-year lows. Is that going to continue to extend lower? A lot of people think that we may have more downside to go between now and Christmas. What do you got to watch there? The managed funds. Here we go again. Managed funds are still long 30,000 contracts of fat cattle as and if they decide to liquidate these positions. That may be something like which would sort of be throwing gasoline on the fire towards lower prices. So lots of opportunity, I think, in livestock. Moving forward, we're going to continue to focus on the U.S. dollar, and also as the harvest progresses, what happens with soybeans and corn prices. That's about it. If you're looking for help, look me up from the web. This is Chris Robinson. Have a great day.